Welcome to Retirement Millionaire Daily's weekly update, where we answer questions from readers like you. Recently, we've had a few concerned subscribers writing in asking us about the current state of the market and whether or not they should be worried. That's why this week we've invited Stansberry Newswire analyst Greg Diamond to join us. Greg, can you tell our subscribers about what's going on right now?
Sure. So what it's really going to come down to is a couple of very important things. Number one is going to be the Federal Reserve. They're going to be looking at the data that's going to be coming out, whether that's inflationary or not. And what they really want to do is they want to start reducing their balance sheet, meaning they want to stop buying bonds. They want to actually raise the level of interest rates to keep up with rising economic activity. But that's all going to be data dependent. So if the data keeps coming in weaker, which we've sort of seen the last couple of days, we've actually gotten a little bit better data, retail sales, some export-import price stuff. So they're starting to look at some of the inflection points that maybe the economy is actually starting to turn around, and that they can start to remove monetary policy. What's going to really trigger any type of market event is, over the last 8 to 9 years, the market has relied upon low interest rates and monetary policy being really good for asset classes like stocks. So the question in a lot of investors' minds is, okay, is this going to be a situation where if they start to remove the punch bowl, do stocks actually react? The other factor is going to be tax reform out of Washington, D.C. The main reason why the stock market actually rallied after November election was the anticipation that asset classes, particularly stocks, would rise based upon future economic activity increasing. So if taxes are lower, people have more money to spend, businesses are going to loan out, and the broader economy is going to do a lot better. So if this can pass in Congress, I would expect that to continue, and it would also correlate to the Federal Reserve saying, okay, fiscal policy is now set. We can start to remove monetary policy, remove some of the stimulus measures that we've had in place for a really long time, and the market can continue in its bull run. Now, do we see some shocks? We are going into a historically volatile time in the stock market. September, October tends to be where you start to see some market gyrations. But even if that does happen, from some of the other things that I do look at, I would look at that as more of a buying opportunity.
Okay, great. Well, and this is all great stuff, and certainly a lot of indicators that you track on Newswire. Is that right?
Yeah. So for those of you who aren't familiar, we have an app, and we provide real-time market headlines, data, trading recommendations. Really keeps you in tune with what's happening in the market. As we go into a more volatile time in the next few months, I think it's going to be very important for investors to follow along what's happening on a daily level. You have the long-term fundamental research that Stansberry does such a great job at, and with us coming on to Newswire here, we kind of bring a new edge to the daily things that are happening, and it increase your knowledge, increase your awareness of what's happening in the market, and really be useful for your investing capabilities.
Great. Well, thank you so much for joining us. If you want to learn more about Stansberry Newswire, there's a link in the description below. That's it for today, but don't forget to like, share, and subscribe, and we'll see you next week.